Well, we are here now. The South African Reserve Bank opened for business for the first time on the 30th of June 1921, 100 years ago. The man at the helm, Reserve Bank Governor Lesetja Kganyago, joins me now with me to actually talk about the significance of this day. Governor, thank you very much for joining us. The Reserve Bank is 100 years old today. This is quite significant, the oldest such central bank on the continent. What does this day mean for you as you are at the helm right now?
Well, it becomes also a day of reflection. Institutions in society evolve, and society creates institutions for a particular purpose, and the institutions as they evolve are shaped by what society wants them to be. The South African Reserve Bank had evolved, and it had been very much part of our history, whether it was during the gold standard, during the Bretton Woods systems, during the wars, during the sanctions. The South African Reserve Bank was there. When we had the debt standstill in 1985, the Reserve Bank was there, and it had evolved. And today, the South African Reserve Bank is a much stronger institution than it had ever been in its history, and it is testimony to the men and women who drafted the South African Constitution and tasked the South African Reserve Bank with the responsibility for price stability in the South African economy. And so today, as we celebrate 100 years, we are not just celebrating 100 years, we are celebrating 21 years of inflation targeting in South Africa. We are also celebrating 25 years of the independence of the Reserve Bank, or put it differently, 25 years of the Constitution of the Republic of South Africa. And this has been a solid institution. But today, as we celebrate the 100 years of the Reserve Bank, you will be having in the event 4 generations of governors. Governor number 7 being Chris Stals, Governor number 8 being Tito Mboweni, Governor number 9 being Jill Marcus, and myself. And if you want to know that how important institutions are, what is even more important is staffing the institutions with people with a standing in society that can execute the responsibilities that the institution has been executed. It is telling. It's 100 years, and I'm only the 10th governor of the South African Reserve Bank. And if you want stability in institutions, it is that important that you appoint the right people, and that those people will be left to execute the job as required by society.
Governor, the Reserve Bank was established as a response to the ravages, financial ravages that were left by the First World War in 1914, and then came the need by the then Republic to actually establish the Reserve Bank. Since then, we've had many interventions from the Reserve Bank through the Second World War, through the tech bubble, the global financial crisis. Now we are here with this pandemic that we are dealing with. And I've heard a lot of international organizations pouring praise on the Reserve Bank with regards to the interventions when it comes to the interventions on the response to the COVID-19 pandemic. When you look back at the interventions and the milestones that the Reserve Bank has had, would you say this pandemic is the toughest one that the Reserve Bank has had to actually respond to on a policy perspective?
In terms of the pandemic, probably, because the last pandemic like this was 1918, which was the Spanish flu. The South African Reserve Bank was not created then. We only opened doors in 1921. This had been a test. And when one looks at the response of the Reserve Bank, one can look back and says that the Reserve Bank responded to this pandemic with scale and with speed. The pandemic is still here with us, but when we look back, we could say that had the Reserve Bank not deployed its tools in the manner in which it had, this economy's ability to absorb the shock of the COVID-19 crisis would have been found wanting. And so the pandemic is still here with us, but when we look back, we can proudly say we have deployed our tools to the best of our ability to support households and firms during this pandemic.
Governor, you've said it many, many times, when it comes to those MPC announcements that, you've had your interventions, the policy tools that you've used have been there, they've been felt right around the country, but you've also, raised concern about the government policy response and, talking about, those, reforms, bringing those reforms forward to make sure that there is not only a fiscal policy response, but a monetary policy response on the one hand. Are you happy thus far about how government has navigated this COVID-19 pandemic, or you believe we could have done much better?
Well, the pandemic is still here with us, and we were learning as we were going along. Central banks themselves, we were learning as we were going along. All those tools, we didn't deploy them all at the same time. It was like, where is the pandemic now? So our first response was a cut in the policy rates of 100 basis points, and then the lockdown was lasting longer, and over the Easter weekend we decided that we need an emergency measure here. We decided to make further adjustments. We did the bond purchases, we relaxed the regulations, and so forth. We were learning. Many of the things that were done were either done for the first time or hadn't been done for a very long time. The last time the Reserve Bank was involved in the purchase of government bonds was actually prior to the 31st of March 1998. And after that, the Reserve Bank had stepped aside. The staff members in the Reserve Bank who at that time were there had retired. So we have done this thing before, but you had young people who had not done this thing before, and they had to learn. Many central banks had to learn going along. I have got no doubt that the health authorities in South Africa, the fiscal authorities, everyone found themselves learning as they are going along. And the steps that you would take, without a doubt, there might be a misstep here, a misstep there. What is important is, do you learn from that misstep and continue to stay the course?
Governor, you recently told the South Africa Tomorrow Investor Conference that the rand has been a shock absorber to the South African economy, but going forward we need to have some other responses, and expecting that those developed countries are actually going to hike their interest rates, and that is going to impact emerging markets like South Africa. How do you think we need to respond to that when it does happen? Because as far as we've seen, yes, the rand has been quite a shock absorber to the economic shocks that we would have felt, but the inflation creeping up, now many people thinking it may be above that 6% rate. We should be worried, especially as we go towards that July 22nd MPC meeting.
Xolani, I think that to understand the nature of the response that we would embark on, we need to understand where we were this time last year and where are we now. Then I think that we would have a useful set of conversations. Last year, this time, besides the pandemic, in terms of the economy, South Africa was running a fiscal deficit of some 11-12% of GDP, and by October we expected that the deficit will be just over 14%. By this time last year, we were expecting that we will have a current account deficit, meaning that we were importing more than what we were producing. Understandably, the economy was under lockdown, so there wasn't much production taking place. This time last year, we were seen as one of the most vulnerable countries around the emerging market universe. things took a turn in December and January. And the turn had to do with the rollout of vaccines in the advanced economies. And that rollout of vaccines changed business sentiment. Businesses reopened, and that meant that businesses overseas were demanding South African commodities such as coal, such as platinum, such as gold, and all of that, iron ore, and that stuff. And economists say that South Africa does experience a positive terms of trade shock, meaning that the prices of our exports rose faster than the prices of our imports. What that did was that what we call nominal gross domestic product in South Africa went up, and with that, the tax collection of the treasury improved. To be clear, the tax collection improved, but it is still down compared to what the treasury expected at the time of the budget last year. And so, as the world starts to talk about normalizing, we can now say that that positive terms of trade shock led to South Africa running the largest current account surplus in 25 years. We still expect that we will run a current account surplus this year, meaning that we are exporting more than what we are importing, and that means that we are earning foreign exchange in the process, which means that South Africa is now less vulnerable than it was this time last year. And I'm saying deliberately less vulnerable. It doesn't mean we are no longer vulnerable. We are just less vulnerable. Getting into what the advanced economies are going to be doing with their interest rate cycle and the laws, South Africa at the moment is better positioned. Our inflation is close to the midpoint of our inflation target range, and we actually expect that it will remain so over the next 3 years. So the scenario that would say that inflation will go above 6% is not even in our base case as a central bank. It's not even in our worst case scenario. There are risks that could drive inflation higher, but those risks we do not believe will push us to the 6% or above 6%. So we are better positioned as the world central banks begin to normalize their policy rates, that as a country we will be able to sustain ourselves.
Reserve Bank Governor Lesetja Kganyago joining us there to talk about the 100-year celebration of the central bank. Thank you very much for your time, Governor.